Well guys, there it is, good old Tesla, my Tesla stock, moving up huge after hours. Look at the stock, $619 a share, up over $38 a share, 6.5% move after hours here. Now you guys know I did a video of the Tesla Q4 earnings preview video. In the video where I talked about the guy that placed a $2 million bet that Tesla stock's going to $820 by June. In those videos I told you guys if Tesla was going to get over 600, they needed to have a 10 out of 10 earnings, a perfect earnings. And they did it. They absolutely did it, guys. I mean, that's how you get a stock price of $619. By the way, and here's a custom-made stock chart I drew for you guys if you want to see what it's going to look like if Tesla opens over 600 tomorrow. That is what it's going to look like there. Now, I had to take a 25-minute break because I had a lot of people calling me, texting me, a ton of Instagram DMs, a ton of stuff going on because the stock was making a huge move. And during that 25-minute period where I paused putting this video together, okay, the stock ended up jumping a whole bunch more, and now it's up over $65 a share. Now the stock's trading near $650 a share, up over 11%, and that was in a 25-minute span. Unbelievable. And so I thought we gotta do something crazy to celebrate this, okay? In this video here, I'm gonna go through all the numbers with you guys. We're gonna look at the top line numbers, the bottom line numbers, the outlook, some exciting things Elon Musk shared here in the investor letter. We're gonna talk about all that, okay? I thought we gotta do something to celebrate this craziness, okay? So for the first 6 people that go down to the pinned comment down there that want to get in my private group, we're going to do 50% off for you guys here today to celebrate that the stock is over $600, okay? First 6 people get 50% off, $600. When you get in there, Discord chat, get right in it, okay? Get right in it, come celebrate with us. The Tesla stock only chat is the one you're going to want to go ahead and check out, okay? There'll be a pinned comment down there. First 6 people that get in, you know, the rest of you guys, if you don't get in, you don't get in, okay? Let's start going through this, guys. So let's go through the basic numbers first, and then we'll go a little more complicated as we go here, okay? So Tesla has reported 4th quarter results, and it's beat earnings, okay? The stock's obviously spiking huge, as we talked about. So EPS, they came in with $2.14 versus $1.72 was expected, which was a very, very nice beat there, okay? That's a really impressive beat. The even more impressive beat, in my opinion, is actually revenue. So analysts had a pretty ambitious target out there of a little over $7 billion. Tesla came in with $7.38 billion. And if you're ever thinking about like what are the 2 numbers that most people pay attention to whenever a company reports, whether it's the bears or the bulls, those are usually the 2 main numbers. You're looking at EPS, what do they do for EPS, what do they do for revenue? And then everything comes after that, okay? So a great double beat by Tesla, okay? Great double beat. I thought they would double beat, and sure enough, but they did even better than I kind of expected, okay? That was unbelievable, okay? As far as some more of these top line, you know, headline type numbers here, let's go through a few more of those and then let's start looking more in depth here, okay? So for 2020, Tesla said vehicle deliveries should comfortably exceed 500,000. Keep in mind, most analysts on Wall Street have them doing 450,000 or less vehicle deliveries in 2020. So when you hear commentary like we're gonna comfortably exceed 500,000 and most analysts have 450,000 or less, like that just puts all analysts on alert that they need to bring up their vehicle deliveries massively, because whatever they were expecting is not even close to the number you're gonna do. When you talk about comfortably exceed, you know, you're expecting to do maybe a 515 number, maybe a 550 number, something like that, okay? So needless to say, any analysts out there that are super bearish on the stock, they need to seriously contemplate changing their vehicle delivery numbers, okay? That is amazing. I think that's one of the biggest reasons why the stock is up huge after hours, okay? Is that number there. I mean, everything's phenomenal in this earnings report, but I think that's one of the big reasons, okay? The company also guided that solar and storage deployments should grow at least 50% in 2020. Solar business and the storage deployment business, this has been a business that's kind of been pushed aside by Tesla, at least over the last couple years. Why? Because they had this huge Model 3 ramp, and hey, they're the first companies to ever ramp an electric vehicle in mass like that, especially in the United States. So this took all their focus, all their attention, and really all their money the last couple years. But now Tesla's getting to bigger and bigger levels. They started having some positive free cash flow coming in. Now they can start focusing more and more on that solar business and that storage business, which is another phenomenal story that I don't talk enough about on the channel. I talk a lot about cars and how many Model 3s they'll sell and how many Model Ys and S's and X's and all those sorts of things. And that's my main bullish thesis. The solar business, man, and the storage deployment, this is a cherry on top business, man. It's a beautiful, beautiful thing, okay? The company now operates 1,821 supercharger stations, amounting to 16,104 individual connections where Tesla drivers can charge their cars when they're away from home. That's a 10% increase from Q3 of 2019. That's pretty impressive, just quarter over quarter, a 10% increase, and an increase of 28% in charging locations and 34% increase in connections on a year-over-year basis, okay? Obviously, as Tesla continues to grow, they need more and more superchargers out there and supercharger network because there are more and more cars on the road. And, you know, think about it, like the more and more cars that are on the road, the more and more that are used in the supercharger places. And obviously, those spaces can start to get really cramped. And obviously, you know, you want to be everywhere, you know, possible, okay? Now, over time, I personally believe they're going to start doing some deals with some of these big players that are like fast food names, maybe retail names and things like that. Somebody like a Starbucks, I could definitely see, you know, Starbucks parking lots in the future having, you know, 2 or 4 of the spots in that parking lot reserved for Teslas, or let's just call them electric vehicles in general. That's definitely a possibility. McDonald's, I mean, think about how many McDonald's are all over the place and how many people go to McDonald's, whether it's for breakfast or lunch or dinner, right? Who maybe go in there and they spend 20, 30 minutes. It'd be nice if you could supercharge your car while you're there. I think of somebody like that, okay? Convenience stores. I think convenience stores, you know, maybe a company like my old company, Quick Trip. I have no inside knowledge of this. You know, for sure I have no inside knowledge of this, but it's definitely possible somebody like Quick Trip could end up doing a deal where they rent out part of the back part of their parking lot or something like that for maybe 2 spaces or 5 spaces. So people that have Teslas can go there and supercharge. Maybe they go inside, they get drinks, they get food and all those sorts of things, right? So I foresee a future where it's not just like, you know, 10, 20, 30, you know, supercharger booths all in one place. I foresee a future where actually a lot of these parking lots that are used for fast food and retail start being utilized for some spots for Teslas. Especially, you know, imagine a day where 10% of the cars are electric cars out there, or 20%, or where we're going long term is 50% plus. Imagine how many electric cars are out there and how many people will need a charge, and how, you know, it could be a differentiator for your business if you actually have some charging capabilities in your parking lot. That's where we're going longer term, okay? So let's start looking at some of these numbers more in depth now that we got the, you know, the headline numbers kind of figured out there, okay? So this is now going to the Tesla Investor Relations website now, okay? So Q4 and fiscal 2019 update, okay? So let's start going through these numbers. So automotive revenues came in at $6.368 billion. That is a 19% growth quarter over quarter, and that is 1% growth year over year. Now you might look at that, and if you don't track Tesla very heavily, you might look at that and say, wow, it's only 1% growth year over year. Well, keep in mind, almost no analyst on Wall Street had them growing year over year in that quarter, because last Q4 was amazing because basically a huge tax credit was being taken away in a massive way for people that ordered in the United States. So a lot of people rushed in their Model 3 orders basically in the Q4 of last year, and you had so many people doing that. And then as we went into Q1 of 2019, a lot of those sales had already been done, so the numbers are kind of weak, and then it kind of give this false interpretation out there that, you know, Tesla was doomed, or they had a lack of demand or something like that, just because so many people like forced their orders through in that Q4 timeframe. So the fact that they could actually grow and beat numbers without, and keep in mind, the Shanghai factory was not producing any cars out of it for deliveries. They were producing cars, but not for delivery, so they don't have any revenue from China in there. So the fact that they grew year over year is unbelievable, okay? And once again, 19% growth on a quarter over quarter basis, okay? Operating expenses grew at 0% year over year, which I think is a very, very good thing if you're thinking about this company's profitability long term. Now, when we go ahead and look at adjusted EBITDA, this number came in at $1.175 billion. That is 13% growth on a year over year basis for adjusted EBITDA for Tesla in this latest quarter. So very strong growth there, okay? Net income attributable to to common shareholders, now this is on a GAAP basis, came in at 105 million. That's 13% growth year over year. Net income attributable to common shareholders on a GAAP basis came in at $105 million. That was down 25% year over year, but on a non-GAAP basis, the number came in at 368 million, which was a 12% growth on a year over year basis. Now, some people like to look more at GAAP numbers, or some people like to look more at non-GAAP numbers. It kind of depends. And I can tell you personally, from my standpoint, if it's a really, really strong growing company, a company that, grows 20%, 30%, 40% plus revenues on a year over year basis, then for companies like that, I like to look more at the non-GAAP numbers. It gives me a better picture of the company. However, if it's more of a value stock, a very, very slow growth stock, then I'm looking at GAAP basis. I think that gives me a better foresee on that company if it's more of a value stock. So somebody like Tesla, I'm paying more and more attention to, honestly, the non-GAAP numbers. And, if Tesla ever gets to a day where they get so big and they don't grow much, then I'll start looking more at the GAAP numbers rather than non-GAAP, okay? So EPS attributable to common shareholders on a basic GAAP basis came in at 58 cents. That was down 28% year over year. But EPS attributable to common shareholders on a non-GAAP basis, which is a number really everybody looks at and even analysts kind of expect and whatnot, that came in at $2.14, which was 7% growth on a year over year basis. So I definitely love to see EPS growing on a non-GAAP basis there, okay? Very, very impressive. Free cash flow. This is a number a lot of shareholders pay very close attention to, and a lot of short sellers. You hear short sellers all the time, Tesla's free cash flow, and especially in the past, they would talk very negatively about Tesla's free cash flow, and it was usually negative. Well, the free cash flow came in over $1 billion in its latest quarter. That was 11% growth year over year. That was 173% growth on a quarter over quarter basis, okay? That is unbelievable, okay? 173% growth on a quarter over quarter basis. And once again, 11% on a year over year. So anybody talking about free cash flow, man, you can't say anything bad about that free cash flow. Unbelievable, okay? Cash and cash equivalents. Remember when the short sellers, they all said, the company is going to run out of money and blah, blah, blah. Well, cash and cash equivalents is at $6.2 billion. And if you round up $6.3 billion, that is 17% growth on a quarter over quarter basis. And that is 70% growth on a year over year basis. And keep in mind with cash flow here, we heard some very interesting commentary in the letter about this, okay? They said, and this is executives talking, probably Elon Musk, okay? We expect positive quarterly free cash flow going forward, with possible temporary exceptions, particularly around the launch and ramp of new products. We continue to believe our business has grown to the point of being self-funding. So that's very, very important that Tesla gets to this level where not only the company is very profitable, but the company can just self-fund itself for the future. They don't even have to worry about, raising money in the future. And the reason being is this should be a company that on a yearly basis starts making, positive net income of hundreds of millions of dollars, if not billions of dollars of positive net income. That money can go right to that balance sheet. And then any new factories they need to build, any, big ramps and new vehicles coming in the future, they can fund that themselves rather than going to investors and saying, hey, we want to sell you guys some equity in the company. So can you guys give us $1 billion or $2 billion? I don't think Tesla ever needs to do that again, in my personal opinion, because the company should just be self-funded from now on. Elon Musk expects that, and the whole, executive management team over there at Tesla expect that, okay? Now, in terms of the commentary around revenue, very important to look at this, okay? In 2019, our revenue growth was positively impacted by a strong increase in vehicle deliveries. Revenue growth was offset by higher lease mix, okay? Because keep in mind now they're leasing cars as well, Tesla is, okay? Which is definitely a business you have to get in a big way if you want to do huge numbers, because not everybody wants to buy a car. A lot of people want to lease cars, okay? Model 3 becoming a larger part of our mix, introduction of the standard range trims of the Model 3, and adjustments to vehicle pricing. These changes have resulted in a reduction of the average selling price, ASP, relative to 2018. We do not expect ASP to change significantly in the near term, which means volume growth and revenue growth should correlate more closely this year. We are positioned to accelerate our revenue growth faster through increasing build rates at Gigafactory Shanghai and our Model Y production line in Fremont. These production increases will allow for higher total vehicle deliveries and associated revenue. And I wouldn't expect any type of negativity around average selling prices for Tesla, if I'm just just looking at the next couple years, because Model Y is coming, Model Y is going to be high, a high production vehicle, and those are pretty much all going to be sales like 50,000 plus. And so I wouldn't expect any decrease in ASPs anytime soon. It's possibility years from now, like let's say, Tesla has a $25,000 Model 2 in the market or something like that. If that ever happened down the road, ASPs could go down. But if you're looking at, the next year or two, ASPs should be very stable, if not increase a little bit over the next couple years, all right? Now let's hear some commentary from Elon Musk around profitability and cash, okay? GAAP gross profit of $4.1 billion remained essentially flat in 2019 compared to 2018. That gross profit is very, very impressive, okay? Volume growth and successful cost reduction efforts were offset by normalization of ASP, mix shift toward Model 3, and higher lease mix. Sequentially, GAAP gross margin remained relatively flat in Q4 compared to Q3, while we ramped Model 3 production at Gigafactory Shanghai. Very important because they did ramp some production at Gigafactory Shanghai, but they didn't actually get any deliveries of it in this quarter. They're all coming in Q1, okay? While we saw an increase in operating expenses in Q4, higher gross profit resulted in a 72 basis point sequential improvement of GAAP operating margin to 4.9% in Q4, okay? And then in regards to the cash, quarter end cash and cash equivalents increased by $930 million quarter over quarter to $6.3 billion, driven by positive quarterly free cash flow of $1 billion. Capital expenditures increased sequentially due to investments in Gigafactory Shanghai and Model Y preparations in Fremont. So at the end of the day, in terms of profitability, in terms of cash on the balance sheet, in terms of free cash flow, all those things are getting dramatically better for Tesla. So this is why if you're short these shares and you're negative around Tesla, it is so hard because those were the kind of the things you could go off of. You couldn't really attack Tesla's brand and the technology and the things they were doing there. You could attack the free cash flow, the lack of cash they had at certain times in the past, and the lack of profitability. But now, as all those three things have shifted in 2019 and are going to shift even more in 2020, as a short, man, it's just really hard to come at Tesla stock anymore, okay? Now let's look a little deeper in terms of the S and X production and the Model 3 production, okay? So Model S and X production was actually negative 29% year over year. Model 3 production was up 42% year over year. So I kind of think about two things when I think about that. One, as far as the Model 3 being up 42%, that just shows how much of a beast that vehicle is. And keep in mind, once again, Shanghai factory didn't have any deliveries out of it. Wait to see what those numbers start coming in at once Shanghai starts delivering, okay? But in terms of the Model S and X, that negative 29% number year over year, that could definitely shift in 2020 to become positive again. Because here's what happened over the course of the weekend, okay? A well-known Tesla hacker may have spilled the beans on what's to come for the automaker's flagship models, the S and X, which I don't understand why they call those necessarily flagship models. I really think of the 3 and the Y as a flagship models. The S and X are just kind of the higher variants. But needless to say, the S and the X are likely going to get hardware changes coming up, which, maybe potentially better battery life and maybe some other impressive changes to the hardware of the S and X are going to reignite those vehicles and make people very excited about them that are kind of looking for those higher priced Teslas, because keep in mind, not everybody wants to drive a 3 in the Y. Some of the higher end customers out there want something, that is kind of, different than everybody else has, and it's just like a couple tiers above. And so to have some hardware changes coming to the S and the X, that's very exciting. And it makes me think, I actually ordered a Model X, probably almost a month ago now, or at least several weeks ago. And that vehicle, we got an email recently or a text message that it still was like 3 to 8 weeks out. And it got me to thinking, what has taken so long for them to build this Model X I got? And I'm thinking it has something to do with these changes coming up. Maybe they're experimenting a lot in the factories and seeing how these changes roll through, and maybe the customers like myself that have orders in, maybe we're going to get an option to, maybe if we want one of those other variants as far as the hardwares go, maybe we'll get that option to make changes and whatnot rather than build. And then all of a sudden we're like, man, what the heck, I actually want this other one you just came out with. So maybe those changes there are the reason why it's taking a while to build that X, honestly. honestly. At the end of the day, there's something going on there, okay? Now, as far as vehicle capacity goes, this is obviously very important as Tesla needs to build a lot of vehicles to fulfill this demand, okay? So as far as the Fremont factory, the production ramp of Model Y started in January of 2020. So that started here this month, okay? Together with Model 3, our combined installed production capacity for these vehicles is now 400,000 units per year. Unbelievable numbers. When you go back to this company just a few years ago, I mean, the numbers were so minuscule. They were doing just 3-4 years ago, and to now be talking about these type of numbers, it's amazing, okay? It's absolutely amazing, okay? The ramp of the Model Y will be gradual as we are adding additional machinery in various production shops. After such expansions are done by mid-2020, installed combined Model 3 and Model Y capacity should reach 500,000 units per year. We will start delivering Model Y vehicles at the end of Q1 2020. So the Model Y is going to be coming before most of us had expected. You know, Tesla talked about this would probably be, you know, a summer, if not an early fall type vehicle as far as it's coming out. And now we're talking about this is coming out at the beginning of spring. So this is another one of those things a short sellers used to always, you know, pick on Tesla for. Oh, it's Elon Musk time. He's always late for everything. Everything he says, you know, he does it like, you know, months later or years later. He's always behind. And now all of a sudden, Tesla's moving faster than anybody had ever anticipated, okay? That is absolutely amazing, okay? What about Shanghai, okay? What about that new factory in Shanghai, China? We have been gradually ramping local production of battery packs since late Q4 2019. The rest of the Model 3 manufacturing process are running as expected. Due to strong initial customer response in China, our goal is to increase Model 3 capacity even further using existing factories. We have already broken ground on the next phase of the Gigafactory Shanghai given the popularity of the SUV vehicle segment. We are planning for Model Y capacity to be at least equivalent to Model 3 capacity. So that is very, very exciting around the Shanghai Gigafactory. I believe those vehicles will be very, very profitable vehicles. By the way, when they come out of the Shanghai Gigafactory, I believe those will be the most profitable vehicles for Tesla, okay? Which if you think about it from an investor perspective, very, very important, okay? What about Berlin? What about that first European Gigafactory? They say, we are moving forward with our preparations near Berlin, which we have selected as the right place to build vehicles for the European market due to strong manufacturing and engineering presence in Germany. You know, a lot of great builders are in Germany of autos, okay? The first deliveries from this factory are expected in 2021. Now, if there were any numbers mentioned on here that I do possibly have some doubts for, it is the Berlin Gigafactory. I've seen a lot of people over there protesting different things. There was something about some wildlife might have to be moved. There was something about will this factory use too much water? So I'm not sure, okay? If there was any number mentioned here that I'm like, I don't know. It's that number about, you know, basically some production coming out of that factory in 2021. I mean, as a Tesla shareholder, I'm thinking more 2022 just because it's Europe. It's Europe. You have to deal with a lot more. Like Shanghai, China, the Chinese government says build over there, you build and you get it up in a snap of fingers. In Europe, it just doesn't work that way, man. It's just two different places. You got to go through protests and people, you know, worrying about this and worrying about that, and it takes a while to actually, you know, get a factory built, and it's just different way of doing business in these different markets, okay? That's the way it is, okay? Now, they show some interesting charts here around installed annual capacity. So at Fremont, they basically have 90,000 production they can do as far as the Model S and the Model X go, about 400,000 for the Model 3 and Model Y, okay? As far as Shanghai, they should be able to have production of about 150,000 vehicles for the Model 3 initially. Keep in mind, Model Y should go into production in Shanghai factory in 2021 at some point. Who knows? You know, Tesla keeps beating these numbers. Maybe we'll go into production at 2020 at some point. We'll have to see. And then obviously you're going to have, you know, once the Berlin factory is actually built, which it will get built, okay? Once that's built, you know, Model 3 and Model Y are definitely going to be vehicles vehicles that are going to be in mass production over there, and expect, several 100,000 vehicles to be produced out of there each and every year, okay? Then you obviously still have the Tesla Semi coming, the Roadster coming, and then that Cybertruck, okay? The most talked about vehicle maybe in the history of the world is the Cybertruck. So, that is coming, and that's going to be a whole other growth vector when Cybertruck comes. Now, when it comes to Tesla, it's not just about making electric vehicles, but it's about the Autopilot, it's about full self-driving, and all those sorts of things when you think about, how this company transforms into a company that could be worth, $500 billion, down the road potentially, or $1 trillion company. That's how this company gets there, is through Autopilot, full self-driving, autonomous taxi networks, and things like that, okay? To date, Tesla vehicles have driven over 3 billion miles in autopilot mode. As our fleet grows, autopilot miles increase exponentially, adding yet more data to a neural net, okay? All Tesla vehicles with our full self-driving computer have been updated with new software that can better detect new details in their environments, allowing us to show various lane markings, traffic lights, stop signs, cones, as well as other vehicles and road users. And I can tell you from my Model 3 experience, I definitely seen some changes as far as, like, if somebody's crossing the road, I see that person crossing the road. It's really cool. I even saw a dog crossing the road and a dog came up. That was absolutely insane. I was like, what? That's nuts, okay? Even things like, cones now you can see on the Autopilot map. Like if I'm passing a bunch of cones, I actually see that right on the screen there when I drive my Model 3 around. So I'm definitely seeing a lot of improvements there. So, which is absolutely essential if you want to have a full self-driving vehicle. It needs to be able to understand everything, okay? So understanding the environment around a Tesla is key to enabling our cars to react to traffic lights and stop signs and to take intersections through city streets. We are currently validating this functionality before releasing to customers. That's definitely very important, Tesla. Definitely very important. We don't want a bunch of accidents, things like that. Definitely, take your time with that, okay? And we look forward to its gradual deployment, okay? So, phenomenal news. This is one of the reasons I think Tesla is going to, has a great opportunity to be the leader in full self-driving. And if they don't end up being the leader, I think they'll probably be number 2. I have a hard time seeing, anybody really beat Tesla when it comes to autonomous vehicles, full self-driving vehicles. I think they're going to be the first ones to get there in a major way. And that's phenomenal for Tesla branding when it comes to selling these vehicles, as more and more consumers are starting to care about buying electric vehicles now. Like, this is just a trend that's starting to play out, and we'll really see this over the next few years. And then the next wave is going to be consumers kind of paying attention to what cars can actually drive themselves, so it's a much safer experience for everybody inside of that car. And Tesla is going to be branded likely as a number 1 player there, and everybody's going to be lagging behind them, okay? They also mention about in-app purchases, which are just amazing technology. I mean, you think about, who else is doing this kind of stuff? Can you just do like an in-app purchase on your Toyota Corolla or your Camry or something like that, or in a Ford or a GM, where basically you can click a button and you can get an update that your car is now full self-driving, or your car is suddenly faster, or any of these other cool things Tesla has right now and future products. Like, that's amazing. That's amazing stuff to just have in-app purchases, and like it goes over the air and, oh, you have this update done. Like, it's just sick stuff, okay, guys? Just sick stuff, okay? What about the battery and powertrain? Due to continued engineering progress of the Model Y all-wheel drive, we have been able to increase its maximum EPA range to 315 miles. compared to our previous estimate of 280 miles. This extends Model Y's lead as the most energy efficient electric SUV in the world, okay? This is huge, guys. This is huge because now we're talking about a Model Y that's gonna get 300 plus miles of range when before it was like, maybe 280. And just in consumers' minds, when you're starting to get over that 300, that's a big, big milestone, and that's phenomenal news. And here you have a lot of the other auto manufacturers. They promise, a big number initially when they're kind of, showing these vehicles off, and then as they get closer and closer to launch, they're like, oh, maybe it doesn't go quite that far. Maybe it's a little less than that, okay? And if we look at this, it shows the electric SUV energy efficiency, EPA miles per kilowatt hour, and the Model Y is just far, far exceeding any of those other players out there. So that's phenomenal news for the Model Y and for Tesla company, because Model Y is going to be a huge product. Now, speaking about a huge product that a lot of people were talking about just a couple of years ago, that was the solar glass roof. Okay, this was really cool technology, showed off a few years ago by Elon Musk, and there was a lot of hype around this. And it's kind of been on the DL for the last few years. I haven't heard that much. Okay, so in Q4 we continue to ramp both solar glass roof production as well as installations. In addition to Tesla installers, we have also partnered with several roofing companies to support installation to fulfill demand for solar glass roof. After organizing several roofing company training days at our training homes in Fremont, we already demonstrated dramatically shorter installation times, very, very important, versus previous version of this product. Solar glass tiles are made in our Giga factory, which is in New York, okay, Buffalo, if I'm not mistaken, okay? And they say we are hiring hundreds of employees at this facility. You don't just hire hundreds of employees unless you were going to ramp this product in mass in 2020 and 2021. So there's obviously some big plans for the solar glass roof because, like I said, you don't just hire hundreds of employees unless you got some big stuff that is about to go down and some huge growth ahead for those products, okay? No, always very important to look at the outlook, not just what the company's done in the past and what they did in the latest quarter, but also what are we talking about in the future here, okay? So as far as the outlook goes, volumes. For full year 2020, vehicle deliveries should comfortably exceed 500,000 units. Comfortably, I love that word choice, okay? Due to the ramp of Model 3 in Shanghai and the Model Y in Fremont, like that's a double banger right there, okay? Production will likely outpace deliveries this year. Both solar and storage deployments should grow at least 50% in 2020, at least 50% in 2020, guys. That's huge, okay? That is absolutely huge, okay? What about cash flows? We expect positive quarterly free cash flow going forward with possible temporary exceptions, particularly around the launch of ramp or new products. We continue to believe our business has grown to the point of being self-funding, profitability. We expect positive GAAP net income going forward with possible temporary exceptions, particularly around the launch or ramp of new products. Continuous volume growth, capacity expansion, and cash generation remains the main focus. I love that. I love that as a shareholder who loves profitable companies, okay? That was kind of the thing that always, scared me away from Tesla and why I couldn't get in that company until very, very recently, a year and a half ago, 2 years ago, whenever I started getting in this company, was basically they had never been profitable, but I did feel they were on the verge of getting profitable, and here we are, and it's actually going down, okay? Production ramp of the Model Y in Fremont has begun ahead of schedule, definitely ahead of schedule. Model 3 production in Shanghai is continuing to ramp, while Model Y production in Shanghai will begin in 2021. We are planning to produce limited volumes of Tesla Semi this year. I know a lot of people have been asking about that Tesla Semi. It's not like it's a huge volume production type vehicle, but when you're talking about Tesla Semi could be $200,000, if not more than that. It's definitely a product that could add a lot to not only the top line, but the bottom line down the road, okay? So that's exciting that they got some things going there. Now, they did show a few pictures here. They show the Fremont factory as far as the Model Y body shop. Yes, the vehicles are being produced, okay? This vehicle shows the Fremont factory from another angle, also of the Model Y body shop. This is super exciting to see Model Y already in production. This shows you another angle of the Model Y body shop there. Those pictures are very recently done. They're within the past week or so, okay? And here's another thing that's amazing, okay? 10 months from the prototype that was shown off to production start in literally 10 months, guys. Like literally this vehicle was just shown off in March and here we are in January 2020. It's already being produced. Tesla's just a fast mover now. Like Tesla's just a fast mover. They're not only moving much quicker than anybody they're competing with in the automobile space, but they're moving quicker than maybe any tech company in the world right now. I honestly can't think of a tech company out there, which I do think of Tesla as a tech company more than an auto company. I can't think of anybody moving this fast, okay? I really can't. When I think of all the other big dogs out there, even Amazon is not moving this fast. And Amazon's usually the fastest mover. I would say Tesla's outmaneuvering even Amazon right now, which is like ridiculous, okay? Because Amazon moves so fast, it's insane, especially for a big company, okay? Now, here's something that's really exciting about the Shanghai Gigafactory. They show us basically, some pictures of the Model 3 factory in Fremont. compared to the Model 3 factory in Gigafactory Shanghai, which obviously, that factory will also be used for Model Y, okay? Look at how much simpler and how much smarter the Model 3 factory is in the Gigafactory Shanghai versus Fremont, California. Like Fremont, California, I don't want to call it a disaster, but it's all over the place. You got General Assembly way over here, you got a paint shop way over here, right? You got a body shop way over here, you got stamping way over here. Like it's not ideal. The Gigafactory Shanghai, it's just done so much better. And you can say, well, why did they do the Fremont factory that way? Well, keep in mind, Tesla bought that factory. Tesla was very desperate. Tesla didn't really have the funds to build their own customized factory, something like that. So they ended up buying that one. I believe Hyundai or Kia or somebody used to own that factory there. I can't remember the specific company. Let me know in the comments, guys, who used to own that Fremont factory. But somebody else owned that Fremont factory. It was up for sale. Tesla bought it. Tesla was desperate at that time because it was just a little teeny company. They bought it and it became their factory. But as far as all these new factories, as far as the one that's going to be in Berlin, one that's in Shanghai, China, and any future ones in the States or just around the world in general, it's just going to be, they're going to be much more profitable factories. Everything's just going to be so much better for Tesla coming out of those other factories, okay? Now, the conference call is about to start here, guys, so I'm going to try to jump on that. It's just about to start here. I might have already missed some of it, so I'll have to probably go in and watch the replay there. But in terms of my overall grade, if you're thinking about my overall grade for this, it is a 10 of 10. This is a 10 of 10 earnings. Absolutely amazing. I can't say anything bad about it. The numbers, I mean, everything. It was a 10 of 10. They knocked out of the ballpark, and that's why the stock has moved over $600, guys. Absolutely amazing, okay? So by the way, the first 6 people that get on that deal, it's a pinned comment down there. If you want to join us in the private stock group, I would love to have you guys in there. First 6 people that get in there, get the deal, all right? Thank you for watching and have a great day. Go Tesla!